Hi, this is Adam Houston. I'm coming to you as always from the digital studios of MarketClub, and the market we're looking at today is one that's had a lot of action, and that's gold. The symbol here for gold is right here. As you can see, we've had a fairly sizable move down here on Tuesday. Is the move over? I'm not so sure, but what I want to show you today is something very important. Here's the high day. This is the high day. We got close to the $1,400 mark, and of course we reversed quite dramatically from there. But the key level to me is this day right here. This is what we call a negative engulfing line, and it's called that. It's also called a bearish engulfing line. It's called that because the body here actually totally engulfs the previous body. This is a strong sign of a reversal. Now, what you need in Japanese candlestick charts are usually several candlesticks together. And when we had the next day, which is right here, this confirmed that this trend was in fact negative. It confirmed the bearish engulfing line. So how far can we go down in gold? Now, we got out of gold, and what I'll do, take everything off the screen, I'll put our trade triangles up here. You'll get an idea so we're not making this up. We had our trade triangles come out right at this level here. 1356.22. We did put an alert on the blog for those of you who watch the blog. Our trade triangles are now 55, meaning a trading range. Let me just look at another element that I think you'll want to take a look at. So just bear with me. Okay, so what we're looking at here are two things. One, we're looking at, this is the MACD indicator. And we talked about this indicator before, but it just crossed over today, indicating further weakness in this market. So the question is, how far can we go in gold? How far was it going to drop? So let me just take this off the screen and I'm going to scope this out a little further so you have a much better idea of just where the last low was and what we're looking at. So let me just take all the triangles off. We don't need those right now. And this was the last low to really pay attention to, because we had the move down right here and obviously the huge move up. And what we're going to do is put our Fibonacci tool in. So we'll click on the highs like this and simply draw this down to the lows. And these levels we've got now are, in my opinion, very important levels to watch. The Fibonacci retracements come in 38, 50, and 62. So if we get to a 38 retracement, we're looking at below 1300, 1297. If we go to 50, we're looking at 1270. And if we go all the way to 61%, which could still mean we have a bull market, but we could retrace back to 1242, which would put a lot of pressure on a lot of folks. Things change in the markets, and that's why when you're trading with a program like MarketClub and our trade triangles, you're really going to take the emotion out of the market, and that's the key thing to do. So looking at the chart right now, looking at the negative engulfing line, and also on the MACD, it would indicate to us that we're probably going to see further downside pressure in gold. But I have something very special for you today. I have a special book called 17 Candlestick Formations that you can use to make money with in MarketClub. I want you to have that with our compliment. Hey, thanks for stopping by. Every success. If you're a MarketClub member, you already have this booklet in your membership. If you're not a MarketClub member, when you read the book, you'll understand why you want to become a MarketClub member. So Adam Houston from MarketClub, thanks for stopping by. Every success.